because it's just about 100 points, but one may perhaps assume that it's a roughly 400-point range between 20,100 on the higher end and 20,700 on the lower end. That's the range that we are keeping an eye on, positionally, not necessarily for tomorrow. Now let's talk about all the stocks which are in focus and take a look at what's really happening. So so we have PI Industries which is in focus, and along with that we have shorts building up in Ultratech Cement, Pidilite, as well as Syngene International, and Metropolis on the other hand advancing in trade, looking at fresh longs building in. PI Industries in focus on account of a handful of notes we've had in today's day of trade. Besides that, among stocks which are seeing in fact a lot of unwinding coming through, where we have short covering in Birla Soft and NMDC, and Granules, Cummins India and ABFRL, looking at longs and windings. So all in all, it's a mixed market, but marginally in the red as far as benchmarks are concerned, Samina.
Indeed, it is a day when the bears seem to be in control of the street. The breadth of the market, also remember, is quite weak. A couple of stocks across the broader markets that are moving though. REC and PFC once again having a field day this morning. Both those counters are trading with gains of about 4%, so 4.5% on REC and PFC is what we have. KPIT Tech is also looking good. So while IT is trading soft, it is KPIT that is standing out in the pack this morning with a gain of about 4%. Aurobindo Pharma is looking good. Crude proxy plays. So stocks like HPCL, BPCL, IOC are all trading with a positive bias. Indigo too is having a strong day of trade this morning. Apart from that, you've got counters like Ipca Lab, Nykaa, metal stocks looking good on back of softness in the dollar. On the sell side though, you've got a few names that are under pressure. So Bank of India is down 5%. You've got Prestige that's down 3%. Loris Labs on back of that FTA inquiry is trading the gain of 3%. Adani Power, Dixon, CG Power, Paytm, Tata Elxsi are some of the other big losers in today's trade. So that's the market momentum. It's a quiet day of trade, slight negative bias on the index itself. Stock-specific trade is what's driving today's activity. Well, we're joined by Amit Goel now, CMT and founder of Amit Ventures. Welcome to the show, Amit. Thanks for joining in. First up, Amit, given the data that we are seeing and the sort of movement on the index, the Nifty does look like it's in overbought territory. What is your view on Nifty?
Thank you for having me here. Good morning to all. We've had a stellar rally in Nifty, right? Yesterday was the first bona fide day of decline, and it was a 90-point cut, which is followed today with another red day, it looks like. So we feel from a technical standpoint, it's a bearish engulf pattern which was formed yesterday. So this would be the first signal for the longs who have been enjoying the profits to probably take some off from the table. And I would not still call it a reversal in the trend right now, because we still are in a consolidation zone with 750 levels and at 20,500 levels being strong supports. So maybe if 750 breaks, we could possibly look at building some shorts there. But right now, I would say it's still a buy on dip opportunity, and let's look at it from how it goes in the next 2-3 days session.
With a quick follow-up on that, Nifty PSU banks are trading marginally lower. Now, they've been gaining for the last 8 trading days. There is a small sense that we might see a negative close on the PSU banking index. I mean, Bank of India itself is down 5%. How are you approaching the PSU banking index?
Again, I mean, they have been leading from the front, hitting all the 6s and 4s in this recent rally. So my view remains the same, that if we are long, since long for this rally, maybe it's a good time to take some profits off the table. And since we also have this very important and crucial FOMC meeting, which is scheduled for tonight, so I think the broader trend would establish itself post this event, and then maybe we can, as a trader, enter whichever way the trend moves ahead.
And on that note, let's get in Nilesh Jain also into the conversation. Nilesh, good morning and thanks for joining in. Let's start off with your view on the benchmarks. What do you make of it and how are you trading them?
Very good morning to Agam and everyone. So basically, this is the second day of profit taking from the high levels what we are witnessing. Specifically, Nifty index, if you look at it, has slipped below 21,000 mark, and it is constantly facing resistance at 21,000 levels. and that is the strike. Even if you look at the derivative data, where the maximum OI concentration can be seen at 21,000 strike. Whereas on the put side, if you look at 2,800, 2,700, 2,600, these are the few strikes where we have witnessed a meaningful open interest concentration. So we might see unwinding of the position if Nifty slips below 20,800 in the spot levels, which seems very likely. And we are expecting another 50 to 100 point in the Nifty index. The next major support for the Nifty is placed at 20,500. On immediate basis, the trend is looking slightly on a negative side. Now coming back to Bank Nifty, where we have witnessed a sort of a correction for the second straight session, and it has slipped below 47,000 mark in the spot levels. So we expect a further downtrend to continue. And this is merely a profit booking which might extend further towards 46,700 to 46,500. On the contrary, if you look at India VIX volatility index, in past 2-3 trading sessions, we have witnessed some cool off in the IVs. So that is certainly a positive sign, and basically this indicates that going forward, we might see some buying coming in from the lower levels. So wait for further decline before making any fresh long position on the index. We are focusing on stock specific action rather than index.
Okay, Nilesh, you've spoken about the Bank Nifty, but, we also addressed the PSU banks in general. Can you give us your view there as well? Are you mirroring that with respect to what your view has been for the Bank Nifty?
So slightly, I would like to differ on PSU banking space as a whole. So we have witnessed sort of a profit booking and selling pressure in the index heavyweight counters like HDFC Bank, IndusInd Bank, and also Kotak Mahindra Bank. So these are the few stocks where we have witnessed some selling pressure. On the other hand, counters like Bank of Baroda, Canara Bank, these are the few stocks that we are liking from the PSU banking space, also State Bank of India as well. So any small dip can be used as a buying opportunity. And today as well, if you look at counters like SBI, which is trading marginally in the green, so I think it can be a good opportunity to make a fresh entry on declines in the counters like SBI, Bank of Baroda, and Canara Bank specifically. These are the three stocks that we are liking from the PSU banking space.
Well, Nilesh, stay with us. The markets are having a quiet morning. Like we've said, we'll take a break. We'll come back when we'll continue our conversation with our F&O guests and talk about stock-specific trades as well.
Welcome back. This is the FNO show, and we now shift focus to all the stocks which are, well, perhaps on the radar of our experts here. So, Amit, I'll come back to you on this one. Let's start off with HDFC Bank. I believe you have a strategy here. So, why don't you take us through your view on HDFC Bank as well as how you would, in fact, deploy options?
Yeah, thanks, Agam. So, I have a slightly aggressive but consolidation view on HDFC Bank. We've had a strong rally from 1460 levels, and around 1670 levels, HDFC Bank has faced a lot of resistance. So I would see that the immediate resistance point would be about 1670 to 1700 levels. If you look at the open interest, about 1600 levels, there should be a decent support. So with the PCR being around 0.9, it gives you a very balanced view with respect to the overall market's expectation on HDFC Bank. So given that view, I have proposed to take a slightly aggressive non-directional strategy in which we will set up a short strangle of where we sell the 1680 call and the 1610 put, and we buy the wings of 1590 put and the 1700 call. This makes it into an iron condor. We need to ensure that we get a minimum credit of about 7 rupees per share. Lot size being 550, we would expect to make about 3,900 rupees on this, keeping our stop loss at 1,500 rupees at either of these two levels, which is 1,600 or the 1,700 levels on a daily closing basis. So it basically yields a ROI of about 6%.
Right. And this, of course, is based on the kind of margins that you're expected to deploy. But of course, we must keep in mind that what Amit is suggesting is a limited risk strategy, and it is important, of course, to buy those wings, because should anything go wrong, should anything go haywire, those wings, it is the wings which is going to come, in favor of the losses that you can perhaps make. But from there on, Nilesh, can you also take us through your first stock pick of the day?
Right, Agam. So we are keeping a balanced approach, looking at the market volatility and profit booking from the high level. So I have a one buy and one sell. I would like to start with the sell call first. That's in Bajaj Finserv, where currently we are witnessing a build-up on the short side. And technically, from the high levels, we have witnessed some profit taking in this particular counter. It has broken its crucial and immediate support of 1700 in the future. So structure looks slightly on a negative side, and the stock may slide further downside towards 1665 to 1645. These are the two targets on the lower side. Stop loss should be placed above 1720.
Right. Amit, I believe you've got a call on Reliance Industries. This one's been an underperformer. There's been so much of fundamental talk that it's going to be all about large cap, and the next run-up or the rally could come in from some of those large cap heavyweights. On back of the FNO data, how does Reliance Industries look? What's the strategy there?
The last leg of rally, if you see, has been led by heavyweights. Even Reliance has had a sharp run-up from the low levels of 2,220, which it made, at the turn of the previous month. The stock has now faced some fair bit of resistance at around 2,500 levels, 2,485 levels to be precise. While the trend firmly remains up, I feel, given the broad market view, that we are in a consolidation mode. I believe even Reliance will mirror what HDFC Bank is likely to do and consolidate in a fairly narrow range, which is between 2,400 levels and 2,500 levels. 2,500 levels happens to be a fair bit of resistance, whereas 2,400 levels has a good amount of support at the 20 DMA along with the 20 weekly moving average, hovering around the 2,400 levels, giving it much needed support. Given this consolidation view, I'm again proposing a non-directional iron condor strategy in which we will set up a short strangle of 2480 call and 2380 put as sold units, and then we will buy our wings in order to convert this short strangle into a limited risk strategy, wherein we buy the wings of 2520 call and 2340 put. we should aim to get about 14.8 or 15 rupees per share as net credit, which will yield us about 3,700, 800 rupees as maximum profit. And the stop loss levels, which is 365 or 2,500, we would probably make about 1,500 rupees as loss. This gives us a very healthy risk return ratio of 2.5 to 1, which is what I would suggest.
Right, that's the view coming on Reliance Industries and a strategy by Amit. Nilesh, IT is under quite a bit of pressure. I think barring KPIT, the whole pack is trading with cuts. So the Infosys, TCS's, broader mid-cap IT names are all trading with a negative bias. Any sort of strategy to play the IT pack? KPIT included, that's the one that's shining quite bright actually.
Right, so you rightly mentioned KPIT, barring that particular stock, we are witnessing some selling pressure in the index heavyweight counters like Infosys and TCS. So the structure is looking slightly on a weaker side on immediate basis, and counters like Infosys and TCS may slide further. So for Infosys, we believe that the downside target for this particular counter comes around 1,425, that's the immediate target, and the reason being it has a 200-day exponential moving average exactly at 1,426. So that is likely to be tested. So a short trade can be initiated on a pullback towards 1,455 to 1,460. That could be a good entry point for initiating a short trade in Infosys, keeping stop loss above 1,475, and downside target would be somewhere around 1,430 to 1,425. And similar the case with TCS as well. We expect a small dip in TCS as well towards 3,550 to 3,530. But it's not advisable to initiate a fresh short trade at current level because it has already given a breakdown of nearly around 2.5%. So wait for some pullback in TCS as well towards 3,600 to 3,620. Keep a stop loss above 3,650 for a short trade. And on the lower side, we expect TCS to test 3,550 to 3,525. And these are the short-term views. We are not expecting any major sell-off in these counters. Some sort of a selling pressure can be seen on immediate basis, but the major trend still looks slightly sideways to positive.
Okay, Nilesh, a very quick question on the Bank Nifty options, considering it is the weekly options expiry. A lot of the action has now shifted towards the 47,000 mark. In fact, at the moment, the spot is below that. The question really is that are we likely to expire around 47,000? And how are you seeing this trade pan out? Do you think that it is still not too late to perhaps go ahead and sell that straddle, which is probably the most popular strategy that a lot of traders use? Or would you stay away from that considering the premiums have already shrunk substantially? What would your intraday view be when it comes to the Bank Nifty today?
So Agam, we have already witnessed a good decline in Bank Nifty as well from the levels of 47, somewhere around 200 in the spot levels at the high point of the day. And it has given a crack of almost 300 points. So now I think there will be a consolidation. And looking at the weekly expiry data for the Bank Nifty, that shows that Bank Nifty should expire in the range of 46,900 to 47,100. So that's the 200-point trading range. These are the spot levels. So yes, I still feel that Bank Nifty 47,000 straddle can be sold. The total premium inflows would be somewhere around 120 rupees. Stop loss can be kept somewhere around 150 to 160. And we expect this straddle to become zero. So keeping a strict stop loss, a short straddle can be initiated. A small pullback is something that we are expecting at current level towards 47,000 to 47,100 in an intraday trade. So yes, straddle can be sold.
Right. Thank you, Nilesh, and thank you, Amit, for joining us today on the show. The markets, like we said, are trading volatile in a tight range. All eyes, remember, will remain on the FOMC meet today. You also got, along with that, the ECB and Bank of England. So that is what will probably keep market participants on the sidelines the rest of the day. And with that, it's a wrap on the F&O show. Here is Metropolis's promoter and MD Amira Shah saying that the company is planning a price increase sometime in 2024. In a conversation with my colleague Pragati Oberoi at the NDTV Profit launch, listen in.
We're here at NDTV Profit's mega launch in Mumbai at St. Regis, and as we move towards the grand opening, we have one of the dignitaries here with us to celebrate this momentous occasion, Miss Ameera Shah, who's the MD and promoter of Metropolis Healthcare. Ma'am, thank you so much for being a part of this time. I would like to start the conversation about Metropolis Healthcare. So I believe that the company has managed to achieve the pre-COVID growth levels as of now. How is the next financial year looking like?
So we still obviously have another few months to go in the year. The first half of the year has been very encouraging in terms of volumes, in terms of revenue, but usually we see the second half of the year better than the first. Q3 is a bit subdued, but Q4 because of festivals, but Q4 is usually the best quarter of the year. So looking forward to closing this year on a good note. And of course, I think, look, I'm very excited about the next few years. I think people have had lots of misconceptions about the industry's growth slowing down, margins under pressure, prices coming down. But this is true for some pockets of the industry, but not true for the whole industry. So we are mostly on the illness side, where critical quality results matter a lot for critical patients. And there we actually have not seen pricing coming down, neither have we seen compression in margins. So overall, I think it's going to be a very exciting few years because we have a good team executing on the ground and lots of plans for expansion.
Okay, that's great. Just a small clarification on the few pockets that you mentioned. Which pockets are these exactly, and do you see them improving going forward?
So if you saw that, a bunch of health tech firms, digital firms came in the last few years as competing in the space, and they started expanding the wellness category. Yeah. And to do that, they started sort of putting very, very low prices. And the worry was always, oh, this is going to actually spoil the whole industry. And what we've actually seen is that there are two parallel tracks in the industry. One is the wellness and one is the illness. Where for wellness, the consumer is the decision maker. And in illness, actually, the doctor is the decision maker. Because when you're sick, the doctor has to take a call about what test you need to do. So usually consumers, because of their non-medical background, are not able to differentiate good quality firms from not good quality, and therefore make the decision on price and services. Yeah. Versus doctors will largely make a decision on quality and the kind of test menu and the kind of interpretation you give. So on the illness side, we have not seen the impact of negative pricing. Okay. On the wellness side, it has been competitive. Right. But wellness is primarily only about 5-10% of the overall.
The share is also small. It's interesting that you bring up the prices point, ma'am. As far as my understanding goes, so far you've refrained from the price increases. Are you expecting to change that going ahead?
So even if you look pre-COVID, we always did price increases once every 2 years. It was never an annual thing for us because you have so many customers, you need to get them to agree, etc. So the cycle was always once every 2 years. The last time we did it was Jan 22. So the plan is to do it sometime in 24.
Okay, so we